Alrighty. Good morning, good afternoon, and good evening. And there's another number coming out the door as we speak. And what's today? Today is Thursday, right? So yeah, jobless claims coming out right now. Here we go. They were a little higher than they were expecting. 235 versus estimated at 230. So they're pushing down on it. The numbers. People are less employed. I guess 235,000 are unemployed versus 230,000. I don't know about that. How much is important? What number? The employment number. Initial jobless claims. Market has mostly ignored that one. Yeah, I know. Yeah, the Dow Jones Industrial Average is up about, what is that? Let's go over to the short term. Do we have the short term? Yeah, let's get the short term going. Right. Where's it at? Right there. And so, just another number out there that tries to define what the reality is. I think that's what it comes down to in the end. You can see here the Dow Jones, let's see, with the S&Ps are up 12, almost 13 points right there. Dow Jones Industrial Average is up 143, and they've been as high as about 160 or so. And the Tech 100, or NASDAQ, and QQQ, and whatever else you might know it by, is the Tech 100 is up about 37 points. So, it's CPI appears to be the top thing. Yeah, exactly. That they all want to see what that's going to do. That's going to be very interesting. The CPI. I think that's what, next week. If it's not next week, it's the following week. It should be very interesting. And then they'll start to take, what they do is they take the different components inside the CPI and they start putting it together, and they'll start giving a projection versus estimated versus actual. Hey, Robin. So that's the dance to it all. And as you can see here, we're looking at the dollar index. We're starting off on J4X with the dollar index this morning, and it keeps on going up in value, but at the same time, where's it at? Right there. Nope, not right there. There it is. Same time, it's been in a sell since right here on a daily. It's been in a weekly buy, of course. So it's doing its thing where it refuses to, give a clear sell signal. But that's really interesting to see the indice do all this action in a sell from 28 to 28 and a half, and then some more even. So that's been very interesting. Luckily, the math here is telling us not to try to trade that long. And it seems like the pairs trades have been better. The pairs have been yo-yo. The pairs trades seem to be, when you look at, say, the Swiss against the, let's go over to it. When you go over and look at the Swiss, or let's say the euro. Let's go right to the euro. When you see the euro, we've been in the sell since right here on a daily, and on a weekly since like right there. So at this point in time, I guess that's it. Is that it there, or is it over here? There it is, right there. And so it's been in a weekly sell since that point. So it's been, a really good slide. Very clear. You could trade that pairs trade, but obviously the dollar index is just nowhere near. Now that dollar index is not a 24-hour index for me. It's the equity index. So, it's not getting all the data, and I bet when you go to J4X, let me just point that out on J4X again, too. Let's move that over to there, like that. Yeah, on there you can see it's all the green. It's been pushing. You can see it kind of oscillates back and forth in the sell and then buy again. But overall, it's been climbing with all those greens. So that's the issue that I have with using the equity dollar index, because it only shows from New York opening to New York close, not 24-hour. And whereas Dukascopy is showing us the dollar index itself for the futures contract, and you can see it right there, it's been a much better tool. I should try to get a hold of that and put it into the system. From there, same thing with the cable. You see, and they've got a new Boris has resigned. He will leave in October, and they'll be trying to figure out who to put in next. There's no elections. Elections don't have to be called until 2025. So they've got three years, basically, 2.5 years, something like that. They can still, the Tories will control the parties, control the parliament still. They have the votes. So as you can see right here on the cable, it's been going down. And that's been, 4, 5, 6, 7, 8 days down. And it's been in a weekly sell all the way back to April 20th. It's just not been able to get into any particular buy whatsoever. It made some charges over in here at one point. It tried to get close, and it just skimmed the zero line and fell right back down again. But overall, we're going to see it's like having, it was very strange. He's got like the policies of Bernie Sanders. So he got elected for getting them out of Brexit or completing Brexit. But his policies have been like they've raised taxes and they've thrown tons of money at green projects and just everything like a Bernie Sanders. It's been very strange, very, very strange. I thought he was going to go to the middle after he got elected as prime minister, but he did not. Once he got the Brexit done, he took on that center left, basically. Kind of crazy. Not center right. Let's see. From there, where do we go from there? We take a look at the Swiss. Let's see what the Swiss is doing this morning. Oh, let me put Euro on the J4X too real quick, just to get a flavor of the action and how well it's marching along with the Chicago Quant. You see all that red, just pressing down. Same thing with the cable. Right there, same situation, marching down. And now we'll jump over to... So there's the daily buy, and what's that? This is the 5th day on the upside. And at the same time, we went into the weekly buy right there. So it's been very firm and climbing. Again, the pairs trades have worked better, obviously, on our charts than the ETF UUP / dollar index. Because of that, it's totally different. And I guess we could try to adjust that over time, but we will try. I'm just not a big fan of the dollar index per se. I like looking at the pairs themselves, but we will, we have it on J4X. You can always look at the J4X one, and I can try to work on getting that straightened out. Let me just go back to the J4X one too. Right there, there it is. So, I guess the best way to describe that would be is that the what we're going to see is the dollar still be firm. Now there's supposedly a stimulus coming around the corner from the Chinese. Supposedly they're going to float $200 billion worth of bonds, and then I guess they're going to invest it into their economy. Nothing too clear at the moment about that, but in the end result is that it's definitely something to be thought about. Matter of fact, let me see if we can find it here. I thought it was very interesting. There was another great story I was reading this morning about how the White House is kind of spiraling out of control. It's kind of fascinating. You rarely get those. There it is right there. Right there. Let me just bring this article over just so you can see it. China prepares $220 billion stimulus with tsunami of bond sales. Okay, so what they're going to do is they're going to sell 200. I guess what they're going to do is they're going to sell bonds. I guess that's what it is. And then they're going to keep some for themselves, and then they'll go out and buy some stocks. I guess, I don't know. Just as we predicted over a year ago, China, which remains painfully limited in how it can kickstart its slow economy, is preparing for a massive fiscal stimulus in the form of a tidal wave of local government bond sales. So they're going to sell their muni bonds, I guess you could say. With growth in the world's second largest... Why do they call it the second largest economy? The European Union is the second largest economy. Faltering, especially after China, weeks ago, that COVID zero isn't going anywhere. There's also a chance zero that Beijing 2022 growth target of 5.5% will be achieved. Isn't going anywhere, and there is also a chance zero, whatever it is. I guess chance zero. It's not going to happen. In other words, that Beijing's growth of 5.5 will be achieved of the lingering threat of new lockdowns. China's slowdown recently forced the People's Bank of China to cut interest rates for long-term loans to cushion the property slump and lockdowns. Meanwhile, as doubts rise about that China will rebound like prior economic downturns, policymakers are set. That's why Mr. Biden is trying to cut some tariffs for them, get some more money for them. He's trying to prop them up. Again, colony. It's a colony of the United States in the end result. Bloomberg says some rubbish. Let's see what they say. Finance is considered to allow local governments to sell a whopping 1.5 trillion won, so that's $220 billion of special local bonds in the year's second half. The people said that the bonds would bolster the struggling economy. The bond sale would be brought forward from next year's quota, according to the people. Okay, so that's what they're trying to do. And I kind of think of them as about the fourth or fifth largest economy in the world, right around that area. I think they're bigger than Germany. And I think that they're about like a little bit bigger or right around Japan. But I don't see them bigger. They're not bigger than the European Union. And the European Union has a currency. And China doesn't. So, they have a floating currency, whereas China has just a fixed... it's like the Lombard rate. Notice they don't quote the Lombard rate anymore. Because it used to be a fixed number, and now it's gone. Fixed things like that don't work. But anyway... That's where we are, and supposedly markets are actually looking at that. They're thinking, "Hey, this could be pretty cool, Maybe money will be made or something like that." I don't know. That's what they're saying. They're saying that the markets are firm because of that. They see China opportunity, I guess. Yeah, it's very strange. The whole thing's always strange, as far as I'm concerned. And then at the same time, Mr. Biden is trying to make it so that our funds can, our government pension funds can buy China bonds. So that's even weirder. Let's see. So can you imagine, like, our military pensions and our government pensions will be able to go invest their monies in China bonds? Oh yeah, brilliant. All right. So from there, we slide over to, we saw the Swiss and we saw the euro and we saw the British pound. Let's check out the Turkish lira. Let's start off with the dollar Turkish lira. Right. Where's it at? Right there. Still moving its way up into the 1722 area. Put it up on J4X. Right there. Showing all that strength. We're kind of at the top end of its range, as you can see on J4X. And at the same time, you can see over here on Chicago Quant, it's still inching its way up. And you just can't get out of that weekly buy, which is like, I don't know, was it like 20 some odd weeks now, something like that? 2, 4, 6, 8, 10. 2, 4, 6, 8, 10. So 20 some odd weeks, 21 weeks, 22, going on 23 weeks, almost half a year now. We're almost, was it 26 weeks would be half a year. We're on one of those situations again where we've seen this product go 53 weeks at some point or another in a weekly buy. Here we are heading for the half year mark where it's in a weekly buy. It doesn't, just looking at it now with the way the green line, let's widen this up a little bit like so. With the green line well above the time manifold on the plus side, it's not exactly trying to get into the minus, that's for sure. All right, from there we jump over to the Euro Turkish lira. Right there. You see it's trying to lift up there. And let's see. We go over to it right there. Same thing, firmness. Just kind of bouncing around. And it is, the weekly is trying to roll over a little bit here. You can see that. So from there, let's see, we go over to the CAD. The dollar CAD. And you can see here it's been moving up just as oil has been moving down. That's the normal rhythm to that all. Let's put it up over here. There it is right there. Same thing, moving down a little bit. Oh, okay, yeah, so it's moving down physically at the moment. And you know, you can see it on J4X. It is a minus right there. The bid ask, so forth, it shows you that. Currently trading at 129.97, just like us on Chicago Quant. But these are hinky ASCII bars, so you kind of have to watch this more than you watch that, you know, that type of thing. I guess the line shows you where it's at in the end. And then with that, we go and look at the crude oil. And you can see there, crude has been down for the last couple of days, and we've been in a sell now with 3, 4. This is the 6th day, and this is the 4th week in a weekly sell. So that pressure is on and is not letting go. And you know, we've come down from the 120 area, and now we're breaking the century mark. And yesterday we went down as low as what 90, 95. And that's kind of like the range. We think it's going to bounce between the 90 and par 20. You know, bounce around that area. We're at the low end of the range at the moment. You know, it could be a combination of things, of a slower economy. It could be, you know, this is the driving season, but with the price of fuel around the $5 area a gallon, and if that's not an imperial gallon, that's an American gallon, so there's 4 quarts in it, whereas an imperial gallon is 5 quarts. And so, you know, it's making it very tough, and it's very expensive, and it's, you know, feeding into the whole economic food chain and supply chain and just everything, you know. So, from there, we go over to the South African Rand. Let's see. Oh, I wanted to go to gold too. There's gold. Now there's gold. You can see gold is cruising on the downside here, having its issues. It's basically up maybe a couple cents, something like that. I guess $1. Closed yesterday at 63.8. It's trading at it closed yesterday at 37.2. Closed at 37.2, and it's trading at 37. Where's it at? 37.7. So it's up half $1. And when we go and look at the South African Rand, right there, we're expecting that it's still high up in the air. Let's put it up on J4X too. There it is right there. Now you can see on the screen there, it's telling us that it is off a little bit. And we'll see what it looks like on Chicago Quant. Right there. Yeah, just down a little bit. Just down a little bit. We'll watch and see. Usually the currency is pretty good at predicting the future of the gold, just like the way oil is able to, or in this case here, Canadian seems to predict the direction of oil. It's a little bit different, but they both have that same characteristic. You know, South African Rand seems to be much more predictable about gold, and the Canadian dollar against the dollar, American dollar, seems to be somewhat the same way, but just a little bit less accurate. But they're both very fascinating that way. So you can see here, we're still hanging up very comfortably. Up, and I think we're seeing some highs too, aren't we? It's been a while since we've seen this high. Look at that. That's just going back to June of last year. And let's take a look at it on J4X. We'll give you the whole screen. It's been a while since back in September of 2020 have we played with this area. So we're almost near 2 year highs. Interesting. And that's where we are at the moment when it comes to these particular pairs trades and the energy sector and the gold sector. Okay, from there we jump over to the yen. And there's the yen. It's fighting, but it does not seem to be able to get going. You know, it's trying. It's in the buy from here. Where's that line at? I thought I put that in there yesterday and saved it. Yeah. So it's so there it is. You know, maybe the yen's building a base. I think that's what it really is. It's a sideways action going nowhere. And that weekly buy is trying to roll over, as you can see right there. And then we jump over to the Mexican peso. Oh, we didn't get the yen up on the J4X. There it is. And just kind of trapped up there. In some ways, it's like a triangle. We had somebody, Jordan or someone came on and was talking about that, or was it Metho 2000, like a triangle? You know, that type of thing. It does have that look to it with the hinkies. It's really trying. It's really going nowhere at the moment. It's a nowhere product. But the dollar itself seems to be, you know, being bought around the planet. That's for sure. And you know, the Fed. It's going to be interesting to see how it all plays out. I'm still comfortable with the 0.75 increase that's coming towards the end of the month here. You know, that type of thing, and I think that's built in, and that makes a lot of people feel like they're fighting inflation. Yeah, wedge, exactly. I think that was last week we were talking about that, and we talked about it at the beginning of this week. It seems to be just kind of flirting in that area. You know, sometimes it looks like a reverse head and shoulders. I don't know. It doesn't seem to let go, does it, Jordan? It just, you know, but I'm impressed that the strength is there. You can see it on the weekly right there, and I'm impressed that they keep on trying to put it in the buys, but the buys don't really go anywhere anymore. So it's really running out of gas, I guess you could say, out of gas line, out of power. None of that fuel. That's why I guess our signals are referred to like that. The power, the gas, the juice. You know, it just doesn't. It doesn't have it anymore. And then it could catch it right again and start all over again, making a move on the upside again. You know, it's hard to believe it has much more room on the upside. Let's go take a look at. We have it up on J4X. Let's go way back as far as we can go, and take a look at some of the highs. Let's go to a monthly and see really. Yeah, see, we haven't seen numbers like this. There's 2012. There's 2007. So are we challenging? We're not even challenging 2000. We're through to 2007 stuff. So there's 2007. There's, what's that? That's 2003. You know, I remember in the 80s, you know, so much higher in the 80s and the 90s. So you said you have a chart that goes back to like 75. Tell us where the yen was in 1982. I'm sure I can Google something like that. And that's a real interesting thing there. Dollar yen yen in 1982? 14.44? Is that right? What was the dollar rate in 1962? $1 in 1962. No, what was the yen? Let's see. Let's try this. Dollar yen pair in 1982. U.S. dollar Japanese historical reference rates. Yeah, 14 and change. So I'm confused how to read that. This is 1.35 really. That's what that is. So it was up around 14. That sounds about right. That's how I remember it. Let's see. 300 in around the 300 area. In 1982, it was around 262, almost 263. In January of 76, it was 304. So yeah, they've got a lot of room there. It's still 66% below those highs of back then. Yeah. Yeah, that's something, and it's something to think about too. Very interesting. Let's see. Let's go from there. Yeah, and we're at 135. So I don't, as far as I can tell, we're just going to bounce around like this until maybe they'll go to a 50 percentile and we'll get up into the 150s, 140s, something like that. Even at 263, that'd be 137, wouldn't it? 130, 63, so 131, 132. So we're already breaking that, a 50 percentile there. And if 300 is it, then it's even more screaming, Just interesting numbers. Very fascinating. All right, from there, we jump over to, where do we go from there? We go to the Mexican peso. There you are. See if we can fix this there. It goes back to the monthly. There you are. And so there's the Mexican peso. You can see we're hanging now right here on the 50 percentile, doing that right there on the Fibonacci sequence. Yep. Interesting. Peso holding up pretty well. It is interesting to see the Mexican peso play the range better than most. It stays close to inside the range better than any other of the currencies besides the Canadian and the Mexican peso. In some ways, as an arbitrageur and as what's the best way to describe it? Intrinsic. We refer to it as intrinsic value in the derivatives world. Intrinsic value. And when you really look at the other currencies around the world and how they've drifted dramatically out of the range that they had been in for a couple of years, the Mexican peso and the Canadian dollar have done a really good job of staying inside their ranges, which is really impressive. And I wonder, is it because of the location? In other words, they're adjacent to the United States. So as you think about it, are we looking at geopolitical risk when we see like the Swiss franc make those bold moves well beyond the trend of the last couple of years, or the euro? You can see the euro is beyond any. I don't think did we? Let's go back to the euro for a second. But have we seen the euro touching almost 1.01? I mean, we've talked about it since it was created. And is it you or Metho 2000? Keep on saying that they're going to see 1 on the euro. Someone in here comes in and says that a lot. And you can see here today it's at 101. It's 1.017 at this point, making a great threat to get to that 1.000. And then when you go back and look at it on, let's go back on the J4X here and look at it way back there. Let's see, right there. And then let's make it a monthly again, so we can go back and look. And when's the last time has it been in this area? Obviously, it's breaking these lows right here back in 2016. I think this is the inception right there. So we're at all-time lows in the euro, which is pretty wild. I think that's pretty dynamic. And you can see when we go back and look, this is the daily chart. You can see it's cleanly broken the two major lows of the 104 area. So it's it's a lot to be said. Something has, I guess, not something. We know there's a war in Central Europe going on, and there's a threat of nuclear war at the moment. So is that the reason why we see Canadian and Mexican peso stay inside their ranges, and the intrinsic value of them makes it clear that they have what's difference between Mexican peso and the Canadian dollar? Think about it. They're next to the United States. Are they influenced by the United States in more aspects than all the other pairs trades around the world? I would have to say yes, just because of location. At the same time, the currencies throughout Europe and so forth are getting beat up, taken down to, really wild times. I mean, Mexican. How about here's one we should take a look at. Now we saw that. Let's take a look at the Swiss. Now the Swiss was locked to the euro for a very long time. They stopped that back in 2016, something like that. 2014, right around there. There it is right there. Let's go to the monthly. Now, saltine's been around for a long time. Okay, so you can see back here in 2010 or 2004, when the euro was coming out as a new product. You can see here this this was up here. So that's not seeing that type of damage. All we're seeing is the top end of the range being challenged. So whereas the bottom end of the range of the euro is definitely being challenged on many aspects. And what's the intrinsic value difference between them I think that you have a war in Central Europe. I don't think Canada is growing faster or slower than Europe, and I don't think Mexico is growing faster or slower than Europe. Is Mexican's economy better than the European economy or Swiss's economy? Same thing. Is the Canadian economy better than those that we just mentioned? I doubt it. As far as I can tell, this is turning into, an intrinsic type of look. In the sense of trying to understand, what is making Canadian and Mexican better than the other currency pairs out there. I'll just leave it at that at this point. All right. So from there, let's jump over to the energy sector. And we'll put up Brent, North Sea. Oh, let's do this too. Let's make it a daily again. There it is. And you can see here, I guess Brent is up a little bit, just like, let's see what our, there's right there. There's crude oil. It's showing some strength in here this morning. You know, I mean, it did settle yesterday at 98.13, and we're trading at par 70. So it's up about $2.50, something like that. So buyers are coming in, you know, picking up some inventory, that type of thing. What else can we say about any of this? I guess that's the logic of it all. And this is down at the bottom of the range when you look at the J4X. You know, it's trying to bottom out. And Chicago Quant's got a lot of work to do to get into a buy. You can see that. It's just turning up. That's it. Our weekly is still down, not even daring to challenge the time manifold. So, you know, there probably will be some sideways and more down, and then sideways and some more down, that type of thing. All right, now let's go over to Nat Gas. There's American gas right there at 5.8 a cubic foot. And there it is right there, 5.8 in the August contract. And you can see it's flirting with a daily buy. But again, the weekly has been in a push since here, and it's not letting go. So it's, you know, it's fallen down from the 690 area, 660 area, all the way down to the, what's the low there? There was a low there. The low there was 542, 535. So that was a pretty good drop. Now let's take a look at the European natural gas. Let's hope today, fingers are crossed. Unfortunately, with it going up, more than likely they're still in the 27s, trying to go to 28 a cubic foot versus our basically 580 a cubic foot, or 6. Think of it as 6 a cubic foot. It can be a rounding factor when it comes to that. And there's European natural gas. Yeah, inching towards that 28, 27.89. I think yesterday we saw it in the 27.60s. You know, so that pressure is on the product there. All right, and then from there we slide our way to, let's see, that's natural gases, and we can take a look at something fun like let's take a look at what a gallon goes for of there's Robo Gas. There's August for the automobiles, the fuel for automobiles. You see it's come down from $4 and change. What's that? $4.11 down to $3.14 out of the factory. And then you have your state and local taxes, which is almost $1 for New Jersey. It's 65 cents with the state, and it's almost 19 cents for the federal government. So you can round that out. 64 and 20 is 84. So you put that on top of it, and that is 416, something like that. So you figure 416. Then you've got to transport it. You got to, you know, you got to put it in a truck, and you got to drive there and deliver it. And you know, the tank truck might have 5,000 gallons, and it may cost I don't know, what would it cost to transport all that stuff around? Probably the further it goes away from the refinery, the higher the price. So when they say that they're price gouging, it's because supposedly gas stations make anywhere from 2 to 4 cents a gallon. That's it, out of that whole thing, after taxes and after paying for it and all that other stuff. So when Mr. Biden says that they're gouging, I don't think 4 cents is a gouge. Now 65 cents is a gouge. So maybe the state, if he's worried about gouging, then the state should drop the taxes. And if he's really worried about the gouging, then the federal government should drop from the 18s down to, say, the 10s or something like that. I guess that's the real gouging, is the government is gouging it. They're taking almost 85 cents out of it. So, and the people selling it are making 2 to 4 cents a gallon. And it's not there's not many. Something like 65 or 70% of the gas stations in America are privately owned by individuals, and only like 35% of them are owned by the like ExxonMobil or Lucas or something like that, that type of thing, or Sun Chemical, Sunoco, or BP, British Petroleum, so forth and so on. All right, from there we drift over to the metals complex. Let's take a look at silver. We've seen Mr. and Mrs. Gold. You see silver's trying to lift today. Put that up over here. Right there. And you can see the pressure's on. The line is moving up fast and hard, breaking the time manifold here in the center. So that's pretty good. But the weekly is still buried and down and not willing to let go. And when you really go back and look at silver, it went into a weekly sell back in April, mid-April, found 1 week to get into a buy, failed, and went back into a weekly sell again. So I mean, this metals complex has gone from the 26s down to the 18s. It's like, wow, 1870 on the bottom side, and 2650. That's like, wow, they've really crushed this metals complex. Someone was asking me about it yesterday in private, locally. It's like, why? They were saying to me they think that silver should be up higher in price. I said, "Duh, you're not the only one. We're all shaking our heads at it." All right, now, quick look at gold. Same thing. It's moving up. It's up a couple dollars now. And let's take a look at it over on J4X again. There it is right there. No greens yet. It's trying to turn. We'll see. Ours is barely budging. Barely. The green line is aiming up a little bit. That's it. I'll show it to you. Oop, not that. See, it's turning up just a little bit like that. All right. So from there, we go over and take a look at copper. There's copper. They're trying to put a charge into it this morning, that's for sure. Boy, it's gotten down, as we said yesterday, down to 335. Woo. Woo, woo, woo. As we went into a weekly sell at the 403 area. So it went down 65 cents. Isn't that amazing? And we were in a daily sell for that nice little ride down to here, which was winner chicken dinner. Went into a daily buy for one whole day. Right back into the sell again from the 370 area, 78 area, almost 380 area. And bound to the 35 after 4 days. 5 days, something like that. 1, 2, 3, 4, 5. 6 days. 6 days it got down to the 335. Something, huh? Robin says silver eagles are $34. And where's silver at? Silver is at $34. And silver is at, let's throw it up on J4X because it's so cool to see that there. Nope, not that. There it is. 1937. So 19. So 20. There's almost a $15 premium. Wow, $14.50 premium. That's pretty intense, That is something. That is something. Yep, that is something. All right. Let's see what else is going on. Let's see now. Let's jump over to copper on here. I guess we did look at copper. We talked about copper, that's for sure. There's the copper, yeah. Now look at that. We got a little green going on there. And that's the action we're seeing there. as you can see, it's not really letting. I mean, it's trying to get going. I mean, I guess if there's going to be Chinese stimulus, then you would, they use the copper as like a currency, like a it's used industrially. It's used as like gold. So I mean, that makes sense for the level of the Chinese economy. That copper would be a pretty valuable product, and they are powering the global copper market. But for it to drift to 335 really says a lot of the weakness that article shows about them trying to stimulate their economy. And I guess that'll put a little charge into the buying. We'll see if this thing doesn't get into a weekly buy and it finds a way to just run up into the 470s again and makes a lower high type of thing and then rolls over again and we're in a sell. Obviously, and we're staying in weekly sells. It'll tell us the real truth of what's going on. And, unfortunately, fundamentals are really the word intrinsic doesn't seem to fit into fundamentals anymore. The meaning of fundamentals doesn't even fit into fundamentals. The only place that you see fundamentals used is the incorporated funds. Like the hedge funds and the retirement funds and the mutual funds and all the investment funds that are all incorporated to take people's money to invest it. That's the only place you ever hear of fundamentals. They write their manifestos up with all kinds of wonderful investment philosophies. Here's something for you. Heard this morning. Didn't think I was ever even going to have this conversation about on the webinar, and that is that the 60/40 investment fund. In other words, 60% in equities, stock equities, and so forth, and 40% in the bonds. The 60/40 has performed the worst in its history. So in other words, funds are, sometimes you have people like, let's say when you're like 21 years old, and they say, I want to invest, and they'll say something like, well, you buy like 80% stocks or 85% stocks, and you'll buy about 15% in bonds, and you'll take that bonds, you'll take that money in the bonds, and then when you have more buying opportunity, you'll turn the bonds into, more stock position, dollar cost averaging down. So the 60/40 philosophy has had its worst half a year, or the worst year in history, and it's been going on. I think they've been doing the 60/40 portfolio since like the 1920s, maybe 1930s, something like that. Probably 1920s. I mean, let's Google that. That's an interesting one. I heard that this morning. It's historically at its worst position ever in history. I thought that was interesting. Let's see, the 60/40. Let me write it out. Maybe Google will relate to it more. 60/40 investment okay, 60/40 investments, real estate, Nashville. Percentage, I guess that's what it really is. 60/40 percentage. Let's see, 60/40 percentage. Let's see what that says. 80/20 portfolio strategy could be new 60/40 in these rates. It's an investment strategy as old as the hills. Allocates 60% of the portfolio to equities and the other 40% to fixed income. Old as the hills. That's pretty good. Here's one in 2021. Inflation diversification and the 60/40 portfolio Vanguard. Why a 60/40 portfolio is no longer good enough investment. That is Investmentpedia. Could the 10 60/40 limited ASX. Investment calendar bank rate. Final rate rule. Okay. So why an 80/20 portfolio strategy could be the new 60/40 in rising rate environment. Yeah, I agree with that. I think that's correct too. So they say that this is a philosophy that's been around forever. There's even an ETF, I think, a 60/40 ETF. I think Horizon has it, and I think Vanguard has one, and MSCI has one. It's a combination of all of them. So they say that it's underperformed the worst ever. Interesting. I think it's interesting. All right. What else can we say about any of this? I guess I was saying something about the incorporation manifestos. So fundamentals are not really intertwined that much anymore in deciding the markets, as much as it's intertwined with just the investment funds themselves. And that's the wild part of it all. That's a real disappointment, We really have. We were really hopeful of these markets functioning a lot differently, and fundamentals coming back after 2008. But they've been superseded by central banks. See, if fundamentals really came back, gold and silver would be way much higher. They would be double their prices right now, easily double their prices, with a threat of nuclear war in Central Europe right now going on, with a live free fire zone in Central Europe, in its largest nation, with the inflation itself exploding at 40 some odd year highs. There's no way in the world that gold and silver should be trading at these prices. They should be trading at even with option derivatives. And how many times I've said that the derivatives have made it a lot easier to not have to trade the metals, because you can now hedge. If you're a portfolio and you have say you're a $2 billion portfolio and you have 24 stocks or 22 stocks invested, you can buy puts and calls on every one of them. You can buy a put and you can sell a call against it and collect the dividend still and have some income coming in from it, and still have some gain, and at the same time not lose like the Dow Jones Industrial Average lost 15-18% at one point, maybe even as bad as 20. The S&P 500, same thing. It dropped below. It got close to 30% minus at one point, and the Tech 100 was well beyond the 30 percentile. It was like 35% at one point. So, that when you put those collars on, that's when you sell a call and buy a put. That protects you from all that volatility in action. So, and then in the old days, what would happen is they would liquidate some of their portfolio. So in other words, let's say they had the 60/40 on, and so all the funds they'd move to 55, and possibly down to and then maybe take that 40 and buy a little gold and buy a little silver with it. Buy maybe some grains, some commodity of some form. Buy a little oil. The 60/40 in essence really was 60% stocks and 40% everything else. Bonds, gold, silver, commodities. In other words, a hedge for inflation was built in with that, because it had to counter the 40 side. The 40 side was bonds, and bonds get beat up with inflation. And so they would liquidate their portfolios a little bit, go maybe to 50-50. And that 10% of being sold can be put great pressure on the marketplace. So, like I said, they say it's older than the hills. So, all right, traders. If there's no questions, we're going to get out of here. So, everybody have a good and smart trading day. And we will catch you all on the flip side tomorrow on TGIF. So that'll be really cool. We will be getting ready to go into the weekend again. So it's been a nice short week for us in America. So What we got to say is happy trails to... Oh, see ya. I was hoping there was a good question. Happy trails to you until we meet again. That'll be TGIF. Happy trails to you, to all our trading friends at Dukascopy. Ta-ta, traders.